In the meantime, let's keep that conversation going on the markets and things you should be following. Thomas J. Hayes is with us, Chairman Managing Member at Great Hill Capital. Thank you so much, Thomas, for being with us.
Thanks for having me, Nicole.
So, what a November this was, huh?
Yeah, I mean, the second best since 1980. And what's interesting is in October, equity investors dumped $16 billion of equities right before you had the November rally. So I think as we go into December here, I want to be long Santa and short the Grinch, with qualification, of course. And that qualification is historically, since 1950, the first 2 weeks of December tend to be flattish or a little choppy. We're seeing a little bit of that today, except in small caps. And then Santa comes to town the second 2 weeks of December on average.
So, it just shows you shouldn't be timing the market because,
right.
You mentioned how in October you saw 16 billion in outflows, and those people missed. They missed an incredible run or rally. You do see a pop then coming. Santa Claus rally, is that what you're saying?
Yeah,
I mean, how does that work? Because we often talk about the Santa Claus rally, and then we talk about, the January effect. We talk about the Santa Claus rally going from December into January, right?
Yeah.
What dates do you watch most closely?
Well, this is the period of the year, Nicole, where actually small caps tend to dramatically outperform. So from Thanksgiving to January 2nd, the S&P is up on average about 2.5%, whereas small caps are up 3.2%. So that's where you're going to get your juice. And if you look at valuations, what's selling off the last couple of days is the Magnificent Seven. You're seeing Microsoft, you're seeing Google, you're seeing Amazon give a little back. The S&P is trading at 18.9 times forward earnings. Mid caps are trading at 13.9 times, and small caps are trading at 13.2 times. So you're seeing some bargain shopping into the holidays.
Yeah, that's amazing. At this point now, when you think about, I wonder if, since the Magnificent Seven are pulling back some, as you were talking, when they pull back, is that an opportunity to get into some of those tech sort of names, or not necessarily?
I think the major opportunity was last fall when no one wanted them, but I do think they're going to hold up fine into year end because I don't think you're going to see wholesale selling. People want to wait till after the new year to take any profits in those. That Magnificent Seven on average is up 80%, so they're going to be just fine. But I think on a relative value basis, you're seeing the small caps and the mid caps start to take off.
You're also watching jobs data very closely. We're watching for jobs on Friday. We'll get JOLTS tomorrow.
Yeah.
Your thoughts on the jobs picture and why it matters at this time?
Well, the magic we've been seeing is Goldilocks, right? So not too hot, not too cold. We want to see a jobs report below 200,000 on the NFP. So a little bit softer. You want to see the average hourly earnings between 0.2 and 0.3 of 1% month on month. And you want to see the CPI next week, 0.2 to 0.3 month on month, as well as finally the Fed meeting. We want to get those dot plots down to zero. We want no hikes moving forward. And if we can get those four pieces in place, you're going to see that big tail end of December rally.
Yeah. All right. And then you have some names here that you're watching. You have some mid-cap names that are in focus as well. Tell me about some of the names. Are these names that you like?
Yes, yeah, these are names we own.
Oh, good. Okay.
VF Corp. Okay,
Yep.
This is North Face, Timberland, Supreme, Vans. Vans has been the weak performer. They're down 20%, but North Face is up 19%. Wholesale change. Bracken Darrell just came in as the new CEO. He came from Logitech. And what's interesting is VF Corp is down 85% from its pre-pandemic highs. When he came into Logitech, it was down 82%. So he's a turnaround guy.
Yeah.
If you put $5 million into Logitech when he became CEO, within 8 years, that $5 million became $133 million.
Wow.
A 26-bagger. We think he's going to turn around this company. He's already installed a new president for Vans. He's cutting costs. He had his kitchen sink quarter, and the stock is starting to take off. So this one, we think, over the next few years, can really start to be a multi-bagger.
I'll tell you, that's not a theory I hear too often. It makes sense because we always say, like, when you look at stocks and you look at companies, always got to look at that management, and that management story is a great one.
100%.
And then you're looking at Crown Castle, right?
Yeah, well, here's one that's in transition. Elliott Management, Paul Singer came in with a $2 billion position and a nasty activist letter last week. Basically said, I'm Paul Singer. I'd like to fire you, and I'd like to fire the CEO. And by the way, how was the play? But leaving that aside, you've got what he wants to do is basically, he says, your peers are dramatically outperforming you over the last handful of years. We want to sell off the small fiber business, the small cell business and the fiber business, which was a failure, and we want to increase the return on invested capital for the legacy 40,000 cell phone towers. And if we can do that, since he's come in, the stock's gone from high 90s to 117. If he's successful with the activist campaign, we think this can work its way to 200 over the next 2 years as well. So this is another one. And REITs do extremely well when rates are coming down, which is what we're seeing right now.
Right, and this was also, yes, you noted a REIT, satellites. When we thought about telecom, this was a different way to play telecom, but great points you've made on that. In the meantime, just the takeaway here is that this may be the time for SMID caps overall, right?
Bingo. You got it exactly, Nicole. I think that's where your relative value is going to be. And I think looking into 2024, small and mid that have underperformed are going to start to outperform. The last shall be first. And I'd also keep a close eye on emerging markets. I know you touched on a couple names before my segment, and that's because the dollar has been steadily weakening again, and that's an environment where emerging market stocks start to outperform. So those are the two areas I'd be focused on for 2024.
All right, Thomas Hayes of Great Hill Capital, thank you so much for being with us.
Thanks
Glad you were here, and those picks as well. We'll keep an eye on those names. Thanks.